Hi, I'm Adam Bell with ACB Logistics, and I'm here today to tell you why your business is failing. So, why are you failing? Why are you struggling? Why does it feel like such a grind? Well, let me ask you this. Do you have a roadmap for your success? And a roadmap can take a lot of different forms, and we'll talk about a lot of them today. But just in general, do you have a clear picture with clear road signs that say, okay, I've gone this far. Now it's time for the next level, the next level, the next level. If you got in your car right now and just drove, do you know where you're going to end up? It might be someplace good, might be someplace bad, but you don't know because you don't have a roadmap. If you have a roadmap that tells you exactly where you're going to end up and the path to get there, then you're going to reach your destination. And that's all we're trying to do. That's all you need to be successful, is to have that clear roadmap. Because the rest of it, you have the skills. Now, if you started a plumbing business and you have no idea how to do plumbing, maybe you need to rethink your business plan. But assuming you are doing something that you're good at, assuming you are doing something that you thought out and you know you can be successful in, then if we give you these tools, you can be successful. So let's start with a few misconceptions. The first being that your bookkeeper is doing enough. It's just not true. Your bookkeeper is doing a bank rec, which is just essentially balancing your checkbook. They're doing that maybe once a month, if you're lucky, and then they're categorizing a few expenses. Is that really doing anything for you? The reason why you want to pay them so minimally of an amount is because that's all that they're doing, and that's not really doing anything for you other than removing the headache of you having to do it yourself. But it's not giving you clarity, right? The other misconception is, well, I have a CPA, my accountant. Who are you talking about? Because last time I checked, most small businesses, when they say that, they're not talking about their CFO that's sitting in the office next to them. They're talking about their tax preparer. And here's the dirty little secret. Your tax preparer does not care. They only care about filing your taxes. They don't care about maximizing your return. They don't care about the success of your business. They just care about filing your taxes on time and you paying their bill. So they're not your CPA. And they're not sitting there auditing your bookkeeper, making sure that they're doing things the right way. And there's a lot of small businesses that have gotten in trouble because they've assumed that's what's happening. Your tax preparer is not your financial person. Your bookkeeper is not your financial person. So, what do you need? You need a financial person. And how do you know that person is giving you what you need? Well, let's go through it. Here's the things that you need. Number one, you need consistent monthly financial statements. Consistent monthly financial statements means that 2 weeks after your month end, you have a packet that tells you how much money you made that last month, how much money you're making year to date, if your equity position is positive or negative, and if you are on track to meeting your goals for year end. That's what your monthly financial statements should have at a minimum. Number two, you should have a budget. A budget is not handcuffs restricting your spending. Your revenue is what's restricting your spending. A budget is that roadmap. It helps guide you to what you're trying to accomplish the next year. So if you have a budget for next year and it says you're going to buy a piece of equipment as soon as you get an extra $20,000 in revenue, then when you get an extra $20,000 in revenue, you just buy the equipment. That wasn't a restriction. That was a clear guideline. And as soon as that number hits, you can buy it and you're not stressed about it because you know you worked out the numbers. Isn't that more freeing than sitting and waiting the entire year and saying, oh, maybe should I buy this piece of equipment or not? So budget, and budget with triggering events. The next thing you need are projections. As soon as January 1st hits, your budget becomes projections. You take what you budgeted, and now you're plugging in actual numbers that are occurring month to month. And that's refining your financial picture for the rest of the year. And you're projecting out to the end of the year, and those projections have how much money you can take out of the business, how much money you're probably going to pay in taxes, how much extra money you have to spend on things that you didn't know you could spend them on. All of that should be planned out and analyzed month after month. The next thing you need to do is perform a break-even analysis. Break-even analysis is essentially figuring out how many units you need to sell or how many services you need to provide in order for you to cover your expenses. It can be somewhat complicated, but at the end of the day, you need to do it. That break-even analysis is your whole world because that tells you, hey, I hit the numbers that I needed to. I hit the numbers I needed to be successful. And as soon as you break past your break-even, guess what? Now you're making money and you have a profitable business. But if you've never done it, how do you know? Are you just guessing? Right? And your break-even needs to have all of your expenses, all of them. Those once a year expenses that you have in there, your taxes, everything needs to be included in there so you can really, truly know if you're breaking even or not. The next thing you need to be doing is a price study. Or if you're doing a construction business or a business where you bid, a profitability study. And they're the same thing. Essentially, you're analyzing what you're selling your services for or your units for, and then you're taking that and determining if that price makes sense. So what I mean by that is, let's say per unit, you're making $1, and you determine from your break-even analysis that making $1 off of that unit means you have to sell 10,000 of them a month. If you take a step back and you say, there's no way I'll ever be able to sell 10,000 units, then you have a problem. And you need to increase the price to the level that's achievable. And if you can't sell it for that price, it's impossible, no one will buy it, then you need to look at your expenses. And if you can't change your expenses and you can't change your price and there's no way you can sell it, now you need to think about a different product. But you have to do the study. And a lot of times people are undervaluing their services and their products. So there's probably wiggle room in there. But you need to actually look at it. For like a construction company, you do a bid. When you finish your project, you need to go back to the bid and look line by line through your expenses to see if you bid the right amount. Maybe you bid way high in one category and way low in another, and those need to be adjusted. And for years you've been doing that and you've gotten away with it because it's just netted out okay. But now maybe that line item that you had a huge cushion in is starting to degrade and your profit's going down. You don't know why. But then you have another problem. If you're not tracking it on a project based by line item to each of your individual projects, it's going to be really hard to do that analysis, right? And same with the units or services. If you're not tracking your expenses by service, it's going to be really hard to do this analysis work. So that's why you need experienced people, not bookkeepers, but experienced people to come in and track your expenses by projects, by SKUs, by categories, by service type. If you do that, then you can do this analysis work really easily. So this is just a starting point. There is a whole lot of other things that you can do. There's a whole lot of other analysis work that can be done. But at the end of the day, if you take these steps, you can see growth in your business, because then you have the tools, you have the clarity to make great decisions. But it's really hard to do this alone. And that's where ACB Logistics can come in. We take a team-based approach to your finances. We have experienced accountants that do the bookkeeping work, controllers that do your analysis work, and CFOs that come in and give you that strategic clarity and partnership. Without that full spectrum of service, you're just not going to be able to make it to that next level. And you cannot afford hiring those staffs full time. So that's why we take an approach called a fractional accounting department. We come in and provide all of those services, but just in the time that you need or can afford. So the fractionalizing is meaning that we just take a small chunk of each one of those person's time and dedicate it to your business. So you still get the support you need. You still get the financial clarity you need, but the price is affordable to you. You are not failing because of you. You're failing because you don't have a clear picture of where you're going. Let us help you create that roadmap, and together, you're going to make it.